Sometimes rotation in the markets just kind of hits you in the face. It's obvious. Value versus growth. And then sometimes it gets a little murky. And then other times it gets very murky. Momo's showing some early strength in the after hours trading, giving it back. S&P mixed. Where are the signals coming from? Well, we got Ryan Dietrich, 8:35 to come on. Statman Do, as he's known on this show. Maybe he can clear up this August market for us. Let's get it started on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. Leaking near the lows of the pre-market session. We're down 18 handles at 95 and a quarter. Triple Q's down $1.39. They're kind of sneaking up on that 50-day moving average, folks, at 556. The dollar up a dime, 98.18. TLT taking a hit, down 46 cents at 86.36. Crude moving away from that support at the $72 area. USO, it's at 73.80. Gold in the red. GLD $1.40, 306.96. SLV in the red, that's down 7 cents. Bitcoin in the red too, that's down about $1,300 at 113,200. And I just want to throw the IWM in there. IWM in the red too. Remember the euphoria and hit that monthly resistance? That's down $1.20 at 224.21. Let's bring Dennis in this morning. If not, hey Dennis, how you doing?
What's going on? Talk to me. What's
so
up?
You saw a market last night before you knocked it off, and it gave you a little bit of the impression that the Momos, they're coming for the Momos.
Well, last night they were rallying the Momos. They were coming to buy the Momos.
Yeah.
And they bought these Momos up something fierce last night. Bring up the chart of Palantir, which is absolutely your leader here right now. Palantir, your leader. Don't kid yourself. It's this the one. This is the leader stock here. It was up over 160 last night. So let's go to the overnight chart here because we want to see the pre-market action here, Joel. We don't
there you
care
go.
90 days.
Almost.
You can see what we were up to last night. We hit 160. So we're up over $4 last night. And now we've come back and given it full back here. So that's not a great sign. Now, S&Ps can be blamed for this because we've rolled over on the S&P since last night. So that's where I would be pointing the finger if I was pointing fingers here. But you definitely saw buy the dip in the Momos yesterday. We always talk about the 10 o'clock rally, 10 a.m. rally. It's a little late. Some stocks came around 10, but more of them were like 10:45. So it was a little bit late. But we had the sell-off. You know, we had the initial pop right off the open, and then you had the leak for about an hour where people are like, oh, crap, get me out. I got to be out of Palantir. And I want to stay with Palantir because it's the stock that matters the most. This is the one that's leading the entire Momo sector. Not leading the market, but leading the entire Momo sector. It caught a bid around 10:45, 142, and got bid all day and all night, really. So we talk about an 18-point rally from yesterday at 10:45 to where we peaked last night. Now, again, we have given it back, but look, we're still green. So we're reluctantly going down here, despite pretty good overall market weakness here. Question, you know, what I see this morning is interesting rotation because I see the Momo names trying to hold green. Few tech names trying to hold green. A lot of stocks red. You know, nuclear is green. There was a bunch of news that came out on Oklo and NNE at 8 o'clock that's helping those stocks as well. But looking, you know, banks, staples, drugs, cyclical names, like across the board. Mega cap 7's kind of weak here too. Meg 7 kind of feels like it's moving opposite the Momo names lately, which is interesting too. So the rotation continues to change. Bottom line, tune in. We're going to keep trying to stay ahead of the rotation here, but it's definitely not obvious right now.
I think one thing that, you know, you got to keep in mind with these stocks, let's just go back to Palantir. You know, you have a stock that, you know, trades 190 not too long ago, puts in a double top, right? Has the sell-off, gets it, you know, that's a substantial sell-off. I mean, you know, nearly 50 points. So during those kind of, you know, sell-offs, people are they're stepping in. They're buying. This is the dip to buy. A lot of got flushed out yesterday. I mean, going down, that was a wicked move. I mean, from the open, it tried to pop and then it just got pounded. So there are people that are starting they're averaging or getting into a position that weren't in the stock. So they're picking it up 145, 146, 147, 148 average or whatever. They're not looking for this thing to go back to 190. They might even not be looking for this thing to go back up to 170. So you've developed a lot of overhead supply here, and it's going to be tough because there's a lot of people that have had the stock run up that are looking to sell, and then I think you have your intermediate traders coming in that are just like, yeah, 6, 8, 10 points, good, I'm gone, bye. The calls I bought, boom, I'm out. So I think the complexion of the market has changed here over the last few days.
Supply. What you've just defined here is we've got overhead supply here now. And I think this actually sets up, and not that I'm a huge technical guy, but if you look at that top right chart there, Joel, you're setting up for the potential of a head and shoulders here, head and shoulders top. We got multiple, like the little left shoulder, 160, where we had 5, 6 highs just under 160 in July and the beginning of August. Then we broke out to the 190. Now we just flushed right through it. And interesting enough, pre-market highs right around the 160. So
yeah.
Now say Palantir major, super duper extra 10-star level system.
Yeah. That's a great point.
Taking
there.
160. So that is your resistance point here. Until it can get back over 160. Yes, listen carefully here. Until Palantir gets back over 160 and holds it, bears are in control in the stock.
I couldn't agree with you more on that one. You love one level, there's your level. We're gonna triple D doesn't give stars very often. So this
so Joel's gonna draw them all in there. We'll let you figure that out how to draw. Draws a little.
There you go, man.
Oh, he's already got them in there. The 160 triple D level. Oh, look at them all. That's some serious stars there. That's some serious resistance there. So,
and I'm gonna save the layout. Let me save
all you buy the dippers that are coming in buying the dip on Palantir today. Today is not a dip. It's already rallied 10% from yesterday's low. You already missed the dip. You missed the dip. It was at 1045 yesterday. This was the rip. If you were coming in last night buying at 160, I'm going to do newsflash for you. You bought the rip. You didn't buy the dip. So even though you thought Palantir, well, it's down $30 from the high, it's not going to get the absolute low. We'll just rallied 18 points from the low. So keep that in mind. We don't chase on pre-market prep, and you chased last night if you're buying 160. I just covered my short. I actually shorted at 159.50 last night. So I just covered my short just overnight scalp, which worked out very well.
Threw a date on it for you, Dennis. I threw a level, I threw your stars, and I threw a date.
I like that. I like all
and
that
I
stuff.
saved the layout, so it will be there tomorrow, and I won't.
So we'll remember. So we won't forget this level. Excellent, excellent news. The other Momo names that were moving up last night, and they all started moving. Palantir started out, and they all started moving up. And you had like Soundhound moving up. Full disclosure, short Soundhound. You have Hims, bouncing back. It's up a little bit here still. You had Oklo, which is still moving this morning. We might as well give you the news because Oklo came out with a headline right at 8 o'clock here. I believe Brentster is there. We say good morning to Brentster, but Oklo signs MOU with ABB. That's a lot of acronyms there. And commissions monitoring room to advance training for Aurora powerhouse deployment. Oklo signs, a partnership. So opens monitoring room for nuclear training. So that actually at 8 o'clock popped up a little bit, Joel. You'll see the pop. Usually those are 8 o'clock prints. It really wasn't 8 o'clock prints. It actually did trade up at that time because of that headline. But what do we notice about this little recent Oklo rally to 68.5 that it just ran up to?
Leak.
It didn't last more than 7 or 8 minutes. Woo, what's that mean? Why? What do you mean? What's good news? Why are we not rallying good news? You know why? Because the bears grabbed control of these stocks, and now rips are to be sold. So you have bag holders, you have overhead supply, you have a different type of market here now for these names. Momentum has broken. That's why we're more in the sell the rip camp on these names, at least for now.
Still
silence
leaking.
comes over the crowd.
Leaking. No, it's just Annie just asked about Tesla, and I want to note that so I can get back to her when we talk about Tesla.
AMD. I want to go to AMD first. We'll come back to Tesla. But
Yep.
AMD ripped higher last night too, full disclosure. I'm still long AMD in the long-term account, but I actually went short my trading account last night because we're in the sell the rip camp on some of these names. What did this get up to? Like 167.5 or something last night, Joel?
Yeah, it actually got
A little
back
bit
there.
crazy
Yep.
with the cheese whiz. Yeah, a little bit too much. Tesla, same story, was ripping up last night, now pulling back here. So all these stocks trading together. Bottom line, all the Momo names trading together. They are linked. Palantir, Oklo, Hood. You know, we can continue. Open is in there too now. Yes, Eric Jackson, your Open is now linked with Palantir. We saw it yesterday very clearly, actually with a higher beta, where we saw Open really get hit hard when Palantir got hurt. And then it rallied a little bit towards the end of the day. And then actually last night it was rallying. Open was up last night because Palantir was up. And now that Palantir is giving it all back, Open is giving it back too. So yes, Open. Eric Jackson was saying this morning, it's not a meme stock, it's a cult stock. So, okay. Eric, the leader, is calling it a cult stock. We can call it a cult stock here too. I can tell you it is following Palantir right now. So again, all these Momo names, it's similar investors in these things. Obviously, there's a lot more, you know, I shouldn't say it's all similar investors, but people going after momentum, people going after a story, people going after, you know, not really worried about, you know, valuation at this point in time. So you do have overlap of investors in there. Open clearly moving with Palantir.
Yeah, flat now. Hitting $4. One concerning thing about the Open chart is that last rally got to 5. This one appears to stutter out at 4. So a little bit of a lower high after a nice rally for Open. Continuing the leak here in the pre-market session. This is a weak pre-market session. We 2-day losing streak, folks. 2-day losing streak. We have not had a 3 or a 4 or a 5-day losing streak since early August. So this is 2 working on 3. That should be noted.
So let's move to the mover of the day here. The earnings stock of the day is indeed Walmart. So we're moving away from the Momos and into, I used to call it value, but it's not value anymore because Walmart's ridiculously overvalued. It's not momentum either. It's just, you know, where everybody shops. Walmart, Amazon, and Costco. Walmart earnings were not that great. They had a miss, 68 cents versus 74. What did you say this is their first miss in how long, Joel?
3 years.
First earnings miss for Walmart in 3 years. 68 cents versus 74. 177.4 billion versus 176.1 billion. Look at the forgiveness. Like, you had Walmart just miss earnings, and the guidance was fine. They say they raised guidance.
Yeah, they
ever so slightly. Like, I mean, I got to get out my glasses to really see this guidance raise that Walmart says in their release. So they're going 250. They were 250 to 260. Get this, folks. They were $2.50 to $2.60 on their 2026 EPS. They went to 252 to 262. They raised it 2 cents. 2 cents. Why do you raise it 2 cents? So you can put raised guidance in the press release to try to fool the algos. Did it do it? I don't know if it did it or not, but they raised it 2 cents. I'm not overly impressed with this whatsoever. $2.62 on 2026 earnings. The stock's $100. I mean, we are paying a lot for Walmart earnings. This used to trade in the peak of the financial, or in the peak of the tech bubble. Walmart was like 45 times earnings, and that was ridiculous. It's not far from there. The Walmart valuation is absurd, to be honest with you. It's not Costco, and Costco's been absurd for a long time. But, you know, it continues to go up because it's got the story. This Walmart valuation is high. I mean, Target, Walmart, yes, Walmart's a way better company, way better run, so it's hard to compare apples to oranges, I guess, at this point in time, but people do it. Target's trading like 11 times earnings. Walmart, same, we're talking $2.60 of earnings times $100. I mean, we're 30, what is that? What's the math? 100 divided by 260, $2.60. Do it. Air math it, Joel. Okay.
20.
I did the old trusty calculator. That PE is 38 times earnings. 38 times. This isn't an AI company, it's Walmart. What is this market doing? It doesn't make sense to me at all. You know what, though? Not selling off much. The reaction is fine. I'd say bulls are still in control here, but I have no idea why we're paying 38 times earnings for Walmart. It's never. When is the last? I'd like to see a PE
chart. I know.
A PE chart, because I'll tell you on Walmart, it's been decades since it has traded 38 times earnings. Decades.
Well, the culprit, and coming from the chat here, the Walmart CEO said, you know what, tariffs are, that they're biting into the bottom line, and there's going to be more in the third quarter.
Is there a culprit? I want to interrupt you. I don't see a culprit. The stock's barely down. It missed earnings, barely raised guidance. Now they're talking about tariffs. It's trading 38 times earnings, and the market doesn't really apparently care. It's hardly down. I wouldn't be surprised if it goes green.
The CEO indicated
here, so I don't even know if there is a culprit here. I'm trying to find the silver lining. This is not great.
Tariff-related, with the CEO, we expect tariff-related costs to increase in the third and fourth quarter. So I think they're telling, handwriting's on the wall. We talked about when some of these tariff effects the companies are eating them, and they can eat them as long as people are doing the same level of shopping. People start to cut back, then you're going to see it. So I think it was pretty gutsy for actually them to kind of bump guidance. I would have. Well, it wasn't much, but we're trading off the pre-market low. I'm just gonna, at this point in time, I'm just gonna go with resistance. You're under the psychological 100 level. But if you can get a pop back up to 101, that's going to be my major resistance moving forward, because you had a pair of lows going into the report there. And I think you have at least a visit here in the very short term. It's really not saying much, with the 50-day moving average at 97.88. And that kind of coincides with some lows in the lower 97s, but weak market, earnings miss. The stock has just been on an unbelievable run.
It's been unbelievably resilient. Like, where's the AI in this story? Is there an AI in the story? I guess everybody's just going to shop. Everybody just goes to Walmart just because it's cheap. And I mean, it is a recessionary stock too, because people trade down and go to Walmart when they're like, hurting, because they know they go buy cheap clothes there, food's cheaper, everything's a little bit cheaper. You go buy, the grapes, they're a little bit crappier. You buy the chicken, honestly, I swear, I buy their chicken, it's a little bit crappier tasting. It's $1 cheaper, but I don't know why. Do they buy the crappy chickens or not? Because I can taste the difference between a Walmart chicken and a chicken from a regular grocery store. I do. Does anybody else have that? Did anybody else taste the difference? Because when I can tell immediately, I was like, it's just done a little, maybe it's cooked a little crappier or something. I have no idea. But the roasted chickens there, they taste a little bit crappier from Walmart.
So if I put 3 roasted chickens in front of you,
and you buy 1 from Walmart and 2 from the grocery store, I will identify the one from Walmart.
What if there's a Walmart, a Costco, and a grocery store?
Well, Costco will be awesome, period. This is why we trade 40. So, okay, valuation time here, because PE doesn't matter until it does. But you know what? When the bear markets start to come around, which we're maybe not in yet, but when the bears start to get control, PE starts to matter. Costco, trade 49 times. Forget the 45. We're done with 45s. 49. We're 50 times earnings on Costco now.
Oh, don't.
Is it safe to say we're in a little bit of a bubble? Is it safe to say that we're just in a little bit of a bubble? Costco's 56 times current earnings, 49 times next year's earnings. 49 times. Now, it's Costco. It's an awesome company. I love everything at Costco. I go in there. My kids eat for free. We eat lunch. Still got the $1.50 hot dog. No inflation on that hot dog, by the way. But 50 times earnings. I'd rather pay 30 times earnings for an AI company than 50 times earnings for Costco and 40 times earnings for Walmart. Sorry.
Do they still have the onion grater for the hot dogs? The thing where you can just chop.
I think they got rid of that. They were trying to cut corners there because they'd keep the $1.50 hot dog. I didn't see the onion grater. Did you see? I didn't. Do they have the onion grater? Can we get confirmation on this? Boots on the ground. Where's Nick Brown when we need him? We'll send Nick Brown in there to Costco. See if there's an onion grater there. I don't know. I actually haven't seen the onion grater lately. That's a good call, Joel. So should I $1.50 hot dogs down? They got rid of the onion grater. Did they do that for real? We're starting bad rumors here.
I know. I haven't got one in a while, but should I try the old valuation talk with Lisa again on the Costco that has been in there for a while?
You know what? It's never worked, and the Costco just continues. It's carried a 40 PE since birth. It's one of those. It's just never succumbs. But it's actually getting stretched even for itself right now. It's usually 40 times, it's 50 times right now. So it's stretched even for itself. Walmart has not carried a 40 PE since birth. Walmart has just become the new Costco. Maybe it is. Maybe it's going to be 40, 50 times earnings. There's a lot of money to pay 40 times earnings. There's a lot to pay with the growth not really there. I mean, we're talking about earnings growth at Walmart here, revenue growth 4%, 5%. Some AI company growing 30% a year. You're paying a lot.
Alan says you have to ask.
Walmart sold to you. Costco sold to you.
Oh, it's gone since COVID.
What'd you say? What?
You got to ask for onions at the counter.
Is that what you have to do now?
Yeah.
So you
and
can't create
Alexander
your own
said
onions.
COVID.
Probably some kid, was playing around with it, got his finger too close, and the tip of his finger cut on there. Got him downgrade.
You know what rallied? You know what rallied yesterday? Target.
What?
Target
did bounce back. Target is a value stock now, but again, Target has just got its problems. So I don't know what the story. I'm not buying Target either, even though you look and you say, well, I pay 4 times more for a Costco and a Walmart than a Target, which is trading 11 times earnings. Well, because it's Target, and 2's company, 3's a crowd. Costco, Walmart, Target. I keep doing this comparison. I'm not going to stop doing that. So I'm not advocating to go buy Target and short Walmart. I'm just advocating maybe to sell Walmart. That's where I'm at. That's my own opinion. Obviously not investment advice. We're not investment advisors here, but I tell you, we got bubbleiciousness in a lot of stocks. And then there's other stocks that just aren't bubbleicious. There's other stocks that are just dirt cheap. It's other stocks that Warren Buffett has continued to buy and just bought a bunch from that are just stupidly cheap. He's saying in the end, I've been through this game a la 1999, and I know how it ends. It ends with value winning and all these bubblicious stocks losing. I'm not saying he's wrong. He may be, 94 years old, getting a little bit older, maybe not, but he's still thinking pretty darn clearly. I don't know. Maybe he's right. Maybe Warren wins in the end here. Like you were saying, sitting in his bathtub yesterday, drinking his 2 cherry Cokes, just relaxing, enjoying himself as he's watching Palantir fall off and Burke up 1%. It's his kind of day. Warren had a day. Warren's had a week. Warren's had a pretty good month. It's been ugly for a bit, but you know what? Value back in vogue.
Okay. Is that the Coke he's drinking? Is that with real sugar or fake sugar?
Oh, no. He only drinks the real sugar Cokes, and he drinks 6 a day, and it keeps him healthy.
Okay.
He's 94 years old. You know why? He never touched a Diet Coke because he needs his wits about him. He doesn't want the aspartame. I drink the odd Diet Coke, and I start forgetting stuff. So I don't know if that's true or not. But the aspartame is an issue. So he stays away from that. He's actually advocating for Trump to get the real sugar, I believe. There's sugar cane actually in the Cokes. We're starting bad rumors here today. Okay, moving on. Moving myself on here. Talking too long. Other earnings last night, Cody. Do we care about Cody? That's down 20%. It's your loser of the day, but I'm not a big fan of Cody, and I don't think the market is either. We had Build-A-Bear. Did Build-A-Bear report? Maybe it hasn't reported yet. I had it on my schedule. Maybe it didn't report.
How about CSIQ? That's a disaster.
Okay, well, that one did report. CSIQ. Getting beats. Earnings.
Were not,
61. No, lost. Wait. Earnings. What are earnings?
Whoa.
Okay, I have no idea what this is. They lost 53 cents. They were supposed to make money this quarter, so somehow they lost money still.
Wow.
Q3 sales lower, 1.3 to 1.5 billion versus 1.63 billion. And they lowered sales guidance. They lowered everything. They missed and lowered. This is not good.
That's a big wait. That's over a $2 miss, Dennis.
None of it's good. This is not good. Sorry, Canadian Solar, not good. Down 15%.
The adjusted figure on Canadian Solar appears to be what was the estimate for? Estimate was for 161. It was they reported oh my gosh, I just had it. I'm sorry. 107. No, sorry. 53 cents is the adjusted figure on Canadian solar.
53-cent loss
Still
is
a
what I
huge.
see. Is it a? I have it as a. Is it a loss or 53? That must
Yeah.
be wrong.
53-cent loss. I'm sorry.
Versus
messed
a
that
buck
up.
61 profit.
There's got to
Oh
be
my
some
gosh.
there's definitely some adjustments in there that you got to do the
man.
math on. So let's just not compare it to that figure.
Okay.
Is the goal, is the point of the story here.
Okay. It went from 7 to 14, right? 7-point move, 3.5. 10.5 potential support here. I'd be digging into those numbers though, because that's a whopper of a miss. I don't know if the tan is getting hit on this. We'll take a look at the tan.
A little bit.
Yeah.
The solar stock's getting hit a little bit. Trump was parading around saying he doesn't like subsidies on solar yesterday either. So that wasn't good news for solar either. So pulling back a little bit here. I think you still stay with best of breed. I'm long First Solar, staying with First Solar. I don't know why you need to reach out to all these other ones. Go with best of breed companies here. And
Okay.
First Solar is best of breed. Canadian Solar doesn't make money. First Solar, even though its subsidies do help, and it would hurt if we lost the subsidies, First Solar trades 13 times next year's earnings. CSIQ has that funny little like not applicable thing because they don't make money. They never make money. Stick with the companies that are best of breed. That's where I'm at on the solar stocks.
Okay. Statman coming on here at 8:35. What about stocks that
Statman called this August sellout, by the way.
Yep.
It took a couple weeks, but he's been pretty right. He was pretty cautious coming into August. Not a bad call. This guy, who does better than Ryan Dietrich, man? This guy makes awesome calls. He's going to be on here in 7 minutes. Stay listening. Stay tuned. Statman do. Earnings are pretty much boring after this here. So let's look at a few other stocks, but I think I'm going to go to ratings early here for a second. Then we can not worry about time with Statman do. So we got Instacart, Maple Bear, I guess they call themselves now, getting downgraded to underweight, which is equivalent to a sell at Wedbush here today. Stock trading down. Chart looks kind of, doesn't look good at all, to be honest with you. I'm going to jump into the note here and see if I can get some color. So Wedbush downgrading. Cart to underperform. See increased competition. Analyst comments. Instacart has demonstrated healthy GTV growth and improving margin trajectory over the last few quarters. Scott Devitt, by the way. That's the analyst who we had on the show.
Yep.
When did we have Scott? 2 weeks ago? 3 weeks ago? Scott
a little bit farther away. About a month ago.
Scott, you made a great call. What was the stock that you made the great call on? Do you remember? Brent, do you remember? You made an awesome call. It was to short one of the retail names. Oh,
you're thinking you're thinking of our Wedbush, our Piper guy.
Oh, was it? It wasn't Scott. Okay.
Yeah.
Anyways, we've had Scott on before too, so Scott's made good calls too. So sorry. So that said, okay, continuing on with the note, we got on tangents. That said, the recent expansion of Amazon's same-day perishable grocery delivery service has intensified the competitive environment. Oh boy. You never want to be in direct competition with Amazon, Ask FedEx, and UPS. That is the story here. I don't even have to read any further here. Same day perishable grocery delivery service from Amazon is really, really, really super duper bad news for CART. That is why stock's been hit. That is why it's getting the downgrade here today. That is why Triple D will not be buying CART anytime soon in his long-term portfolio, although we can trade anything.
Yeah, I mean, competition. Doesn't everybody and their brother like deliver groceries? I mean,
I think so.
Yeah, Uber.
But you don't want Amazon in there because Amazon does everything the best. They do. And there's one company that when they get into something, they just kill everybody else, and that is Amazon.
Took out the 50-day couple like last week, and then that's been your good number on the upside. So if you get back that also the highs from the last two sessions, if you were using that as a resistance point, you're fared well. 43 is just sticking out to me on the downside. Pair of lows last week, right at 43, 43, 43, 17. And then look at all those stubborn lows in June. And some in May. So there is your major level of support in Maple Bear Inc. Cart, C-A-R-T.
We did get some 8:30 a.m. data. It seems like a nothing burger here. We got jobless claims higher than expected for last week. 235,000 jobless claims versus 226,000 economists estimate. Continuing claims were also higher than expected. We also got the August reading for Philly Fed Manufacturing Index. This is an index reading on a base of 100, reading down 3 tenths. Economists were looking for an increase of 6.8%, 6.8 reading. But as I said, market's not really reacting to this data here.
Light data week, but the big data will be tomorrow at 10 a.m. when Jerome Powell speaks at Jackson Hole. That is what the algos, the world is waiting for.
Yeah, and we got obviously a lot of Fed officials here. It was mixed, when we were just getting commentary from the minutes. It was mixed. We basically have half the Fed looking to lower rates and the other half saying, hey, inflation concerns are there. So it's not a slam dunk. Brentster, can you bring up the Fed, the tool, just bring it up
right now
for us one more time before our guest comes on here, before we get Ryan. Ryan's just getting mic'd up here in the background. So we're going to take 1 minute here to look at the Fed tool and see what interest rates look like if we have actually increased odds here for the no cut, because the no cut was 100% or that they were cutting. It was 100% they were cutting. Then it was down to 95% after the PPI. Where is it now after, oh my gosh, is that right?
Oh my gosh, it's at 21%, Triple D.
So holy crap, who made it 100%? Like, I want to know the person that made it 100% that they were cutting 2 weeks ago before the PPI. Because that person should be fired, because obviously this is all traded stuff. But it's 100% is 100%. Like, it's 100%. It's over. It's done. It happened. But you don't go to 100% unless it's absolute certainty. That means it happened. So it was 100% the odds 2 weeks ago that they were cutting in September. Now there's only a 79.8% chance that they're cutting. 79.2. I originally said no cuts this year.
So clicking over to October.
I'm going to be wrong. I think there is still going to be cuts this year because I think there's just too much political pressure to not cut. I mean, Lisa, is it Lisa Cook? Is that who's there's attacking now?
Yeah.
Every hawkish member of the Fed, everybody who's sitting there and saying don't cut, he's trying to find a way to get them fired. We got Palantir running a campaign on Twitter here right now saying she did something illegal with specifying 2 primary properties as, her two of her properties as her primary residence. Trying to get around. They're digging. They're trying to find anything they can to kick people out. They want to fire everyone and put a bunch of doves in there. I'm telling you, there's going to be a lot lower interest rates next year when all these people are gone, because it's going to be every time a Fed official is gone, it's going to be another Fed person coming in that's a dove. Only doves are going to go on here. So you're going to have very easy monetary policy next year. I'm telling you that. But right now, the Fed's trying to make a stand here. So that's the story. Ryan Dietrich, let us know you're in the background. Let us know when you're ready here, because we're always ready for Statman Do, and we got a special intro here. The Brentsters got it.
There he is.
I love that song.
That is the best, and it's not related to Batman at all. YouTube, not related whatsoever. The music's completely different.
I mean,
yes, the YouTube algos, it's completely different.
I do wear a belt every day, but my belt is nothing like Batman's belt. So that's about the extent, I think, of our. I'll tell you, I've got a bunch of charts, but I love the conversation you guys are just having. I'll kind of jump in. We're in that camp too. That clearly there's a lot of pressure to cut rates. I work with Sonu Varghese, and a lot of people follow Sonu. Sonu and I do a lot together. He's been in the camp that, we're probably going to see a cut or two. But what you were just saying, Dennis, a couple weeks ago, when it was 100% chance, Sonu's like, I bet it's more like 65, 70. So we know small caps had that big bounce, and the market was kind of expecting all this dovishness. And now, as I'm going to share on some charts, we do think there's a little bit of inflation problem. We do think that they're going to cut. I want to be very clear, at least we expect them to. but it's not going to be as many cuts probably as what the market was pricing in this time 2 or 3 weeks ago. It's very interesting, like you said, with Cook getting pressure, and then you kind of read in between the lines, and somebody at the White House, I forget who, honestly, but somebody said, well, did Powell know about her mortgage issues? So like if he knew about this and still hired her and didn't report it, maybe that could be their angle to kind of pressure him just that much more to get him to leave before May. But the bottom line, Dennis, like you said, whoever takes over next May, they're all every time they're in front of a mic talking about how dovish they are, and the market's probably going to be sniffing that out if it hasn't much already. But it's interesting. I mean, every day is something new. Every day is something new. I'll put up my slides here. How's everybody doing this morning? Am I hanging in there?
Bring up the slides. We're doing great here.
It's
fun. Thursday, getting ready for the weekend. A couple days. Getting ready for some Ryan stats here.
Yeah.
Watching the momentum market go down, then up, and all over the place here. The Momo.
I got to catch my flight to Jackson Hole, but that's all I got.
Oh, there you go. You going to go out there and do some fly fishing? All right. Hopefully you see, don't be scared of heights. You see that one, guys? It should be there, I hope.
Oh, I love it.
Yep.
It is there.
Perfect. So I'll just talk for a little bit through this together this morning, all these. This is one of those big ones that we talk about. Of course, I am a chief market strategist at an RIA. We manage billions of dollars. So yeah, I'm always kind of cautiously bullish. I mean, I'm never going to come out and be super bearish just because of kind of where I am. I want to be very clear. But, for the most part, we've been bullish. We've been right. And we still think there's a lot of reasons to still be pretty optimistic here. One of them I hear all the time from people who are scared of heights. I think not the Dow, wrong one. S&P's made 1,268 all-time highs, since 1957. Why 1957? That's when the S&P became 500 stocks. And you can see here, I just say, don't be scared of heights, right? It's not like eventually we're going to have an all-time high and the market's going to crash. We get all that. We don't think we're there. All right. I mean, I want to be very clear. But again, just historically, you see a lot of all-time highs. They happen for a while. That by itself is not a reason to be scared. I looked at what I shared with you guys last time. I was on, I think right before July started. And a couple of them I'm just going to reuse. I think it still makes sense. One of the big things we talked about earlier this year, yes, we were optimistic. We thought the S&P gained between 12 and 15% this year. We never cut our target. Everybody else was cutting their target. We were down 15% for the year in April. We were, I'm not saying we were close. We were thinking about it, but we still thought we'd bounce back, and we have. And one of the key things we said was, hey, third years of bull markets, where we are now, tend to be choppy, tend to be frustrating. Early in a post-election cycle, you tend to have a lot of volatility. We thought there might be as much as a 15% peak-to-trough correction this year, right? Plans are useless. Planning is everything. President Eisenhower. And we were planning for some volatility. No, we didn't see knee bear market. We didn't see President Trump holding up that piece of paper with effective tariff rates up over 25% either. Neither did anybody else. That's why the market fell 10.5% in 2 days in April. But we've come back. But the reality is, hey, this bull market, the third year tends to be choppy. You can see kind of here, but they do tend, once they get to this stage in life, these bull markets last longer. I say bull markets like a cruise ship. Once they get moving, they're hard to slow down, they're hard to stop, and they're really hard to turn around. Yeah, 100-year pandemic did it before. 2022, obviously, the war, higher interest rates, that upset things. But it really, we're in a pretty strong place here, in our opinion. You can just see here breaking it down by all these different years. Third years of bull markets usually aren't that great. Good news is we think that's in the past, right? We're pretty optimistic. Obviously, lows are in. I mean, I was on with you guys, and I was on record the third week of April saying the lows were in. People hated that call. I don't know why they did. I laid out all the different stats and reasons why I thought that. I'll skip ahead. Like one of them is wide breadth thrust, right? I mean, this one, everybody likes to make fun of it. Whenever it happens, I get choked up talking about it, apparently. But you can see, I mean, the returns extremely strong. We saw lots of different things like this from the third week of April until early May. All these different rare, extreme. I know one of them was like up 1.5% 2 or 3 days in a row. We saw this wide breadth thrust, number of stocks overbought, all these different technical factors that said, listen, the lows are in. Expect a surprise summer rally. Clearly, that's where we've been. And one of these other big picture ones, again, just you don't blindly invest in this stuff, but it's good to know. Post-election years, where we are right now, have been extremely strong going back 40 years. You can see here, that's the blue, up 18%, never lower, right? Or I think it's 9 to 10. I think it's like 9 to 10 post-election years have been higher. So we knew that coming into the year. We knew early could be volatile. We knew early could be, for whatever reason, after 2 back-to-back 20% gains, and all these bears that literally were making fun of me this time in 23 when we were bullish, all of a sudden we're bullish. We said in our shop, I bet it's time for something to kind of knock off these Johnny-come-latelys, and it happened. But big picture, as you see here, hopefully, post-election years are usually pretty strong, and sure enough, that's kind of where we are right now. Now, a couple more. When I came on with you last time, we talked about all the idea of like red and black at roulette, right? And sometimes people get caught into this stuff like, oh, it's 50-50, it's due. Well, we were up 10 years in a row in July. And I laid out kind of why we thought the summer rally would continue, why July'd probably be strong. There's a chart I share with you. Yeah, July's up now 11 years in a row,
Wow.
which ties the all-time streak. Who knows
going long
what's
next
going to
July
happen,
1st.
but yeah, but again, there were other reasons, not just because July's been up, whatever, big deal. There are a lot of other reasons, and sure enough, that has happened. I will say August, we're a little more wishy-washy in August. I got some stuff coming up here that we wouldn't be surprised if we had some seasonal weakness coming up. Still optimistic. We manage money. Like I said, we actually took a little bit of risk off maybe 3 weeks ago in some of the portfolios we run. We're still overweight equities, yes, but we went from, maybe 67% or so, beta down to about 64%. Nothing major, but again, just expecting maybe some type of well-deserved consolidation or weakness, seasonal weakness, which we'll talk about. Oh, okay, so sell in May, go away. Everybody hears about it. It's all over the place. That hadn't happened. We're higher in May, June, and July. And you can see here, I'm not sure how many examples there are there, but only it looks like only 3 times. Only 3 times lower. Oh, I'm sorry. I was looking at the next 12 months. Only the rest of the year. Only twice you're lower the rest of the year. So I think it's 14 out of 16, but I'm not sure the exact number. You got 87 in there. Okay, well, we're not in an 87 mentality. And then 2018, that's the one that gets me. That conversation we had earlier, if everybody remembers 2018, the Fed did not cut. The market wanted a cut. Market threw an enormous fit, had a bear market in 3 or 4 days right into Christmas Eve of 2018. Then the Fed pivoted in early 2019. It was off to the races. So there's, history doesn't repeat itself. It often rhymes, Mark Twain. We'll talk about the Fed here in a second more, but that's one thing that gets me. But reality is when you're strong these 3 months, up these 3 months, which normally aren't all that great like we were this year, pretty much you could say the second half of the year is going to be pretty good. We just were above the 20-day moving average. So short-term moving average on the S&P, what's the exact number? 68 days in a row, right? 68. That's a very, very long time to be above a short-term moving average like that. We know that. It was an incredible bounce off the April lows. Again, I took a look all the times you're above 60 days. What happens when the streak ends? And again, it's one of those, again, it is what it is. You can see the returns there and the future returns, much better than average future returns. 1 month later, maybe kind of wishy-washy. That's kind of where we are, right? And then even 3 months later, it's kind of right. It's actually a little bit stronger, I guess. The median's not. But reality is we just had an incredible move, which 6 to 12 months out says you probably want to be a buyer of any near-term weakness. Golf players out there, when you hit the ball in the sweet spot, right? Feels perfect, sweet spot. Well, some of the worst second halves of the year ever have taken place after some of the worst first halves ever. 2000, 2001, 2002, 2018. I'm sorry, 2008. Some of the worst second halves ever have after the best first halves ever. I think 76 is in there, 83 is in there, and obviously 87. Very stretched rubber band. What I'm getting at, years are up between 5 and 10% middle of the year. So pretty darn good, better than average, but not like super duper good. That's the sweet spot. You can see here the final 6 months have been lower only one time, right? With stronger than average returns when you're in the sweet spot. So people always see I share this stuff and talk about it. They say, well, that's just one example. I get it. That is just one example. We don't do anything based on one study or one stat. We look at a lot of different stuff. But this just, again, confirms to me that if we have some normal seasonal weakness the next, say, up through, honest to goodness, Halloween, I wouldn't be surprised by that. I don't think it's going to be anything major, maybe 5 to 8% pullback, perfectly normal if it happens. But it'd still be an opportunity likely for continued higher prices. Now, here's the stuff. I actually put this together just this morning before I came on. I saw Ned Davis did something on this. This is why I love social media, because you follow people, you get ideas. We all kind of I live by this one. They say if you take it from one person, it's called stealing. But if you take it from everyone, it's called research. So that's been my motto for a long time. And shout out to Ned Davis, who kind of started this, and I kind of built on it. But we're probably going to see a rate cut. Like you guys just pointed out, less than 80% now. I mean, it's 85% on Friday. Okay, so it's I think that we'll know a lot more tomorrow with Powell. 24 hours from now, give or take, the statement comes out. I think he speaks at 10 a.m., but the statement comes out. Anyway, when you go a while without cuts, so you have a cut, then there's a pretty long break, and you cut again, which is what we're probably going to see. December, I don't know, 18th or 17th. Last year, the Fed last cut until probably 4 weeks from now. So I just looked when you go between 5 and 12 months, pretty simple. I mean, there are some times when Fed went like 2 years without cuts. I kind of threw that out because that just felt like 2 years is probably too long. That doesn't feel like the environment went. So again, it is what it is. You can see it here. 6 months later, a year later, pretty solid returns overall, especially a year later. You're talking, 10 out of 11 times. Yeah, not too bad. Up double digits. Median even better. Which one's negative there? Let's see. What is that? Okay, so 2001. All right, remember that rate cut in early 2001 on January 3rd? I think the NASDAQ was up like 6% or 9%, something like that. One of its best days ever. But obviously, we all know what happened back then. If you follow your history books, it wasn't a good year. But most of those other times when the Fed went a good amount of time in between cuts, well, hey, pretty good. Here's another one, and I know I shared this with you last year, and it's still valuable. When the Fed cuts near all-time highs, and I have no idea if they're going to cut in September, and I have no idea if we're going to be near all-time highs. I'm just laying out the framework now. When they cut, when the market's within 2% of an all-time high, the S&P 500 has been higher a year later 20 out of 20 times. We're probably going to be 22 out of 22 later this year when some of these other more recent cuts happen. So again, it is what it is. Don't fight the Fed. If they cut when the stock market's near highs, I shared this a year ago. People kind of poo-pooed it. Well, here we are. I guess a couple more. So again, Sonu does this stuff, does amazing work on our team. Some of our geese are, what's his title exactly? Chief Global Strategist, I think I know that. Anyway, he's like Madonna. Just call him Sonu. Everybody knows Sonu. But he lives and breathes in this stuff. And he's been saying for about 2 months now, he's a little bit more worried about inflation and what the market is saying. And what you just talked about, Dennis, where, 100% now people are looking at some of this inflation data. We're seeing services inflation start to go higher. We're seeing, core services going higher, core goods going higher, not massively higher. But the one thing, I didn't add it, but the one thing Sona pointed out, we do calls with our advisors all the time, sticky inflation, right? There's sticky inflation. I believe it's the Atlanta Fed takes a look at sticky inflation. Sticky inflation is going up a lot. No one's talking about it. No one. And new ones last time we saw that, late 2021. Sticky inflation started going higher. Everybody got money from the government. Everybody's making money in crypto. Everybody's making money in SPACs. It felt like we were just having way too much fun. The Fed should have been hiking. Apologies. Hiking in late 21 was our opinion, or at least early 22. They waited, then the war started, everything went crazy, and it was not fun for anybody, obviously. But the reality is we are seeing some signs inflation's creeping up more than we want. That's what Powell's been talking about. I know what the president says. I know what else is saying. So we think they're going to cut probably 2 times this year, probably less than what the market thinks is our base case. I know small caps had a big bounce. We're overweight. Large caps over the small caps, again, mainly because we don't think the Fed's going to be cutting quite as much as what the market says. Just a couple more. We think restaurants are a great way to find out what inflation's doing, right? There's wages in there. There's goods in there. There's fuel in there. Lots of stuff in there. Well, we are seeing restaurant inflation continue. This is like the price of a sit-down restaurant, right? Not fast food. I mean, we all like fast food, but it's more of a sit-down, fast casual restaurant. Those prices continue to trickle higher, and this is a really good way to see what inflation's doing. The PPI, I'll just make this a fun one. That came out last week. Producer level, everyone's worried because producer level came in way more than expected. Maybe it goes to the consumer next. Yeah, very well might. We'll just have to wait and see. But this is just for market stuff, and I know there's a lot of experienced traders on this call, but somebody new. Here's a little thing about the market. Stuff that's never supposed to happen happens. Here's what I'm getting at. The PPI came in at 0.92%, expected to be up 0.21 or 0.22. All you got to know, that's an 8 standard deviation event. All right. Okay. What in the world does that mean? It's supposed to happen once every 6.2 billion years. It just happened last week.
Oh my God.
We saw another one in 2021, a big standard deviation move off of the low. So all I'm getting at, we've seen this throughout history. This is economic data. I get it. But trust me, stock markets do this stuff too. So just know those fat tails where you can make a lot of money when it comes to this industry. But also just knowing these huge moves and misses and things like that, they happen way more than they're supposed to. Like this one, 6.2 billion years. We had it last week. So congrats. Just a couple more things in the calendars. Just plain and simple.
Looking out for that
calendar.
12 billion years now.
Yeah, long time. Hopefully, I don't know how long we're all going to make it, but we're not going to be around 6.2 billion, I don't think. At least we won't be. The reality, though, is right now in a post-election year is a little bit weak. Just something to be aware of. But here's a couple things that got my attention. You got some negative divergences on some of the oscillators there on the top. The stocks above their 20-day moving averages haven't been quite as impressive, even though the market's going up 50-day, 200-day. I noticed things like Staples on a relative basis to the S&P 500, it actually in the last 2 weeks has not made a new lows on a relative basis. So Staples are starting to outperform a little bit. Healthcare, that's because of UNH, we get it. But still, some of the more defensive areas are starting to get a little bit of a bid. I'm not super worried about that. We are underweight those areas. We're actually overweight, your large caps, your industrials, your financials. I'm just saying we're seeing some cracks out there that maybe the market's due for a little bit of a pause, which I'm not worried about. But again, those are some things we're looking at. Oh, here's another way of showing it. Literally like tech was about the only thing leading. These are some of the biggest components of the S&P 500. And if you peel back that onion, again, the more defensive things are all of a sudden starting to try to take that baton a little bit. So just some things to think about. Okay, I guess that's it. All right, guys. Well, that was what I had. I think 16 or 17
Power
slides.
15 minutes from the stat man.
Yeah.
Never disappoints. So prepared, so organized, so concise. Love it, Ryan Dietrich. Now I have like 10 questions.
Oh yeah, I
like
figured. Let's I'm gonna drink a water. Fire away.
So starting with the first thing, and obviously your presentation was awesome. You're somewhat concerned that inflation is trickling higher. Tariff effects are not really in there. We had Cameron Dawson on here yesterday saying there's been a little bit of tariff effects, but they're really going to start to hit in Q3.
Right.
So all of a sudden we're starting to see, the PPI event once every 6.2 billion years. But I mean, tariff effects are not really in here yet. If we start seeing the tariff effects happen, like I just kind of setting up like almost like the perfect storm for inflation here, because we are going to put a bunch of doves on the Fed that are going to say, I got to lower rates if I want to keep my job. And we, and this is coming next year, like lower rates are coming because the doves are coming. So they're going to probably try to ignore whatever inflation data they can and just justify, the jobs are light, whatever they can do to keep interest rates lower. Are we setting up the perfect environment here next year for inflation to come running back? Like it sounds like we are.
Yeah, I think so. I mean, I think there's a possibility of that, obviously. Now, let's be clear. If the economy weakens and demand weakens, well, we might not have massive inflation. I mean, think about 2022, and I know that was a crazy year. The economy was actually okay in 2022. We created 4 million jobs. Now, a lot of those were jobs we got back from COVID, I understand. But the reality, again, is if the economy stays strong, we could have a little bit of a potential inflation problem. You look at, again, just psychology, right? If everybody's thinking alike, somebody isn't thinking. What are we seeing? Small businesses are seeing potentially lower inflation. Consumers, like the Michigan Consumer Confidence one, that's, I think, biased by politics, let's be very honest. But that's all of a sudden starting to see, maybe optimism about inflation coming. And it's like, oh, wouldn't it be something if now that started to perk up? And the other thing, I love seasonality. I love talking about this stuff. And again, we don't blindly invest in it. But next year's a midterm year, all right? Just go back in history. Midterm years usually aren't that good. Midterm years have the largest peak to trough correction. We'll see. It kind of makes sense that if this year is another solid year when all's said and done, I think it will be. I still think we're going to be higher than where we are today on equities in general. I think maybe a decent amount higher, to be honest. But Dennis, what you're saying is it fits out quite well with the idea of that. Now, I will say this, like with the money we run, right? We have some managed futures. We have a decent amount of gold. I came on with you guys 2 years ago, said we like gold. We bought gold for the first time in the models we run for our Carson partners in early April 2023. I didn't look at that like gold versus stocks. I looked at that. We looked at like gold versus the other stuff, bonds, right? And clearly that's done well. So there's ways you can kind of insulate yourself if we do see higher inflation. Managed futures and gold are the two I guess I'd stick with. Different. You can go more defensive when it comes to stocks. I guess we'll cross that bridge when we get there. But those are things we're thinking about. And again, the work Sony does. We just had our mid-year outlook come out like a month ago, maybe 6 weeks ago. Anyway, trend for our economy is about 3% growth the last couple of years. We thought the second half of this year we're probably going to grow between 1 to 1.5%. So below trend. Recessionary, no, but below trend. So again, I know the word stagflation's out there because that's what I was slowing down, and that's kind of what we could be heading to. And again, it's interesting. I mean, I don't know.
When is the last time we had a stagflationary environment? Obviously, we're talking where economic growth goes negative and inflation prices keep going up. It's been a long time. Have we?
Yeah, it's been a long time. I mean, 22, you could argue parts of it, right? The housing market, manufacturing, but not the overall economy. So I'm not for long. It's been a long time. It has been a very, very long time since we've seen
Okay, homework for you, Ryan. I want to know the stagflation stuff here. So we're going to give Ryan some homework here. Yep. He's going to go and dig up what the market did last time we had stagflation.
I wasn't good. I'm going to assume it wasn't good. I'm just going to go that far.
I'm going to assume it wasn't good either. Yeah. I do think we're setting up for that potential environment here that you could see stagflation in 2026. And that's a scary thought.
Yeah. Yeah, it is. And one thing I saw, what the JGB yields were breaking out to like the highest level like in years. I mean, you've got global bonds still trucking higher, and I know, so we'll see. I mean, that could be sniffing out some of the things we're talking about too. So there's a lot going on in there. I feel like I've almost sounded more. You know what? This is probably contrarian. This is probably the most negative I've sounded on this call with you guys
ever.
Guys,
Headed for the
this thing got
hill.
me scared. Stop me on do supposed to make me feel better.
I know.
Yeah.
Normal. Well, I mean, hey, like I said, we kind of see a little bit of bumps here, but for the rest of this year, we're still pretty optimistic. But
Yeah.
I don't know. What do we think about football, guys? What do you think? I mean, I'm a Bengals fan. We'll see about the Bengals. It's all about Joe Burrow keeping them upright in Ohio State. I mean, there were a bunch of new players. We'll see. What about Michigan? What are we thinking?
We'll see. Lost a lot of players. We lost a lot of players to the NFL, freshman quarterback.
Yeah, that's true.
But we got some talent. I think we're gonna have a tough defense. But Lions got to bounce back. A lot of injuries too. Ryan, everyone wants to wish you a happy anniversary.
Oh, thank you.
Yep.
You don't wish my wife. She's the one to put up with me for that. So those don't know. 21 years ago yesterday, I sat down on a bar. I was probably overserved. I can honestly say it now. Whatever. There's a blonde girl next to me. We started talking, and my joke is we've been talking for 21 years ever since. And I've been sober most of those 21 years, but I was not when we met. But anyway, we met yesterday. Went to the exact same place actually where we met 21 years ago, and
Fun.
it's kind of cool. It's kind of cool. So yeah, I said she's working on her third 7-year itch, putting up with me. So she's
Yeah, we know what that is. Ryan's Dietrich, Chief Investment Strategist at the Carson Group, joining us once again on pre-market prep, and we're taking note. Ryan, we'll have you on again next month.
I look forward to it. Take care, everybody. Enjoy football season. Getting back. My kids went on the bus to school today, first day of school, so it's busy for everybody. So, yep. All right, guys. We'll see you next time. Thank you for having me.
Okay. Thanks, Ryan.
Okay.
We always go. We do ticker time for tips. So we got a tip here coming from Greg LeBlanc. He wants to know about Tilray, asking Joel. We're going to ask our technical analyst here. Does it hold the $1? Continue to gain compliance here with NASDAQ? Well, I think it's trying to make a stand. 3 lows in the same area here. I do think the deregulation here that Trump's trying to do is a good story here for pot. So it's got, the Trump administration behind it, which is good news. Tilray is Canadian, which might be an issue. But anyways, I'd say as long as it's holding a buck, it looks okay to me, but don't look at that long-term chart.
Yeah, don't look at the long-term chart. There's a pair, to me, a buck, what the next support is at 95 cents. Yeah, you had 2 lows at 94, 43, and 95.87. Someone asked about Tesla earlier. I said I would get to that. And, it just loves to come back to that 50-day. Spends a little time above it, comes back to it. Looks like we're going to go spend a little bit more time under it here. That's at 323.90. So I don't know if you're waiting to short it at 316. I don't know. You've had a trading range, but keeping an eye on that 50-day moving average for shares of Tesla.
Core, we've got a couple of buy ratings here today. Smaller analysts here, a couple of boutiques. We've got CoreWeave, HC Wainwright upgrading to buy. They give a price target of $180. So I think the stock.
I think it already hit 180, Dennis.
Yeah, I know they were late on this one. Already also upgrading it to buy with a similar target of $180. So I don't know if they're together, if that's the same firm, but anyways, I see both. I don't know if it's the same thing. My thoughts on CoreWeave is fade the $180 price target. I don't think it's getting there again. So yeah. I also think that you got resistance now at 100. I also think it didn't bounce much with the Momo rally yesterday. I think IPO fun time is over. I think reality is setting in that all of these IPOs are super overpriced.
Okay. That's CoreWeave. I mean, it lost that 100 and it's wow, the 50 days way up there at 135.33.
And can we say we were right to not buy CoreWeave and to buy Core Scientific if you wanted to buy CoreWeave? CORZ is down nothing in the last month, and CoreWeave is down a cool like 30%. So that spread has come in dramatically here in the last month. We know CORZ getting bought, and that was a different way to play from a risk arbitrage perspective. So selling your CoreWeave and buying CORZ was the call.
All right. Thank you, Craig LeBlanc. Tomorrow's guest, Anthony Pollock from Real Life Trading, has had a busy month. We'll fill you in on that when Tony comes on tomorrow.
Nice.
We're gonna go over. We got some stuff to figure out over there in the STN room. We are looking at a down open. We got to figure out what those imbalances are doing. See if we get any.
There's some good ones.
I just got to see a red here, but Dennis can always find some green. We'll find a green on the screen over the STN room. Thanks for joining us, folks.